NIO is nearly bankrupt. In the third quarter of 2021, they burned $440,597,000 to keep operations afloat. Among startups, and especially EV startups, such atrocious net income figures are quite common, given the massive overhead associated with manufacturing and scaling up vehicle production. Fortunately, most of the high-flying EV startups have billions, if not tens of billions, in the bank, so they can maintain such losses for dozens of quarters or several years. The same, however, cannot be said about NIO. Given this alarming situation, NIO went ahead and completed a share offering to raise $2 billion in November. This has bought them a few more quarters, but completing share offerings in the future is going to be significantly more difficult, given that their stock is down 80% from their all-time highs last year. Considering all this, MacroAxis gives NIO a 96% probability of bankruptcy. So if NIO doesn't figure out profitability within the next couple of quarters, they could go bankrupt. Just a year ago though, NIO was likely the favorite EV stock on the market after Tesla. So what happened to NIO? Taking a look back, the story of NIO dates back to a Chinese man named William Li. William was born on August 9, 1974 on a dairy farm in the Anhui province. Growing up, William's family was rather poor, but they highly valued education and wanted William to go to college. So they started saving up for college as soon as William turned 7 years old. As a kid, William would often live with his grandparents who lived in the nearby Wuling village. This was especially influential for William because whenever he was with his grandparents, they gave him an accounting task. William was responsible for counting money and keeping records of all the cows that his grandfather sold. This experience didn't lead to some insane revelation like William figuring out the importance of money or William learning the mechanics of business. But it did make it clear to William that regardless of what he did in the future, he definitely did not want to live the rest of his life in the village herding cattle and keeping records. So William started focusing on leaving the village and seeing the outside world, and his first major opportunity to do so was of course college. William attended Peking University in Beijing, which is actually one of the most prestigious universities in China. Apparently, it's the center of humanity-based studies in China and is often called the Harvard of China. Currently, their acceptance rate sits at a measly 0.91%, so given that William got accepted, he clearly knew what he was doing. Anyway, William majored in sociology, and one of the first things he did after enrolling was pick up a job as a deputy monitor at the university. His responsibilities included leading trips to historic places like the Great Wall of China and helping his cohort build teamwork skills. William had no complaints with the job, but unfortunately, he would fall ill and be hospitalized for a month, and by the time he recovered, he lost the job. This experience made William realize how dispensable he was, and in an effort to combat this, he would try to add a few specialties to his skill set. This included getting a minor in computer science and law. Soon enough, William graduated from college, but he was still as lost as ever before, so he decided to follow what interested him. One of William's biggest passions was cars, but William wasn't ready to do anything nearly as ambitious as starting up an EV company. So he gauged the business landscape, and the most obvious opportunity he saw was the internet. So in 1996, William decided to combine his passion for cars and the opportunity that came with the internet in order to found a precursor to BitAuto. Today, BitAuto has evolved into being one of the largest automotive publications in China, and they do everything from marketing consultations to providing transactional services. But back in 1996, BitAuto was basically just a blog, and William was the main reporter. Given the rapid growth of the internet throughout the late 1990s and the lack of Chinese automotive content at the time, William was able to build up a solid following rather quickly, which allowed him to go from barely making ends meet to being pretty well off. Despite the evolution of his finances though, William had no urge to stop being a reporter and take on a more traditional role as a CEO. He says that being a reporter gave him insight into the automotive industry that he couldn't get anywhere else. And it wasn't until 2000 that William stepped back from reporting and officially founded BitAuto Holdings. While William was initially hesitant to make the move, once he made the move, he was fully committed. He split the business up into 3 segments, which included the advertising and subscription business, the transaction services business, and the digital marketing solutions business. Starting with his advertising business, this is basically what he was already doing. He sold advertising spots on his news portal to automakers, dealerships, and insurance companies. Given that all of you guys are watching YouTube, I'm sure y'all know how this works. Moving on to their transactions business, BitAuto partnered with the leading automobile finance platform in China called the Yixin Group Limited to provide various financial services to their customers. And finally, in terms of the digital marketing business, given that BitAuto had achieved moderate success on the internet, William started to provide digital marketing consulting services to automakers and dealerships. You know, the classic how to set up a website, how to drive traffic to the site, how to convert viewers into customers, and so on and so forth. William did this for the next 13 years, which not only made him wealthy, but gave him significant connections within the automotive world. And this put him in the perfect position to start up NIO. Being involved in the automotive world for decades at this point, it was clear to William that EVs were the future. He wasn't the only one that was convinced of this future either. Basically, all of corporate China and the government were confident that EVs were the future, and given the pollution problem in China, they wanted to switch over as soon as possible. As a result, when William proposed the idea of founding an EV startup, dozens of high-flying tech companies lined up to provide funding. This included Tencent, Xiaomi, Sequoia Capital, Lenovo, Temasek, and TPG. And with that, William founded NIO in November of 2014, but it wasn't originally called NIO. Initially, the company didn't really have a name, and they were simply referred to as NextEV. Anyway, despite all this funding and the involvement of big players, the general public had no clue what NextEV was. Given that NextEV's vehicles were consumer vehicles, this wasn't a good thing. So, William's first order of business was to generate hype around the brand, and what better way to do that than show off a flashy sports car? In November of 2016, NextEV debuted the NIO EP9 sports car. The car would actually become the most expensive EV ever built, clocking in at $3.48 million. The EP9 was also the fastest EV ever built with a maximum speed of 217 miles per hour. Despite the impressive stats, this car was obviously not reasonable for the average person in China, but this didn't matter. NIO had no intentions of mass-producing this car. This was simply a publicity stunt like the Tesla Roadster to generate hype, and that's exactly what it accomplished. Soon enough, people from around the world were talking about NIO's crazy electric sports car that could break 200 miles per hour. And this gave NIO the perfect opportunity to launch their luxury SUV, the ES8, in late 2017. The ES8 wasn't exactly cheap, but it also wasn't crazy expensive either. It started at $67,000, which made it comfortably affordable to well-off families. Initially, NIO's customers and car magazines loved the ES8, but unfortunately, this didn't last too long. You see, starting in late 2018, stories of ES8s catching on fire started to surface. There were only a handful of cases, but as you would guess, this was terrible for NIO's public reputation. NIO would end up recalling the ES8 in 2019, and NIO's delivery numbers would subsequently jump off a cliff. In late 2018, NIO was delivering over 3,000 ES8s per month, but by mid-2019, they were delivering less than 500 ES8s per month. NIO tried to combat this decline by launching a smaller SUV called the ES6, and this did help quite a bit, especially given the lower starting price. But NIO was still in a pretty rough position financially and reputation-wise at the end of 2019. Out of nowhere though, Tesla would reveal the Cybertruck, and Tesla stock would go to the moon, and the rest is history. Even though NIO stock was sent to the moon along with Tesla from a low of $1 to nearly $70, NIO was far from safe due to three main reasons, starting with their investor base. Most of the people who invested in NIO did not invest because they were confident in their financials or optimistic about their future. In most cases, they missed out on Tesla and they didn't want to buy into Tesla at several $100s. So they looked for the next Tesla, and the most obvious choice within the stock market was NIO. Considering this, a significant portion of NIO's investors were short-term investors who were looking to make a quick buck. So you can bet that these guys left as soon as NIO started to dip substantially, which has made it significantly harder to do share offerings and raise money. And that brings us into NIO's second major problem, which is that they're not profitable, nor are they close to being profitable. Most of Tesla's run occurred right after Tesla achieved profitability after years of struggling with Model 3 production. In fact, Tesla neared bankruptcy on several occasions while trying to ramp up production.
Well, Tesla really faced a severe threat of death due to the Model 3 production ramp. Essentially, the company was bleeding money like crazy, and just if we didn't solve these problems in a very short period of time, we would die. And it was extremely difficult to solve them.
How close to death did you come?
Within single-digit weeks.
And this is exactly where NIO is at right now. Last year, they delivered 91,000 vehicles, and over the next few years, they have to scale to hundreds of thousands. If we take a look back at 2017, Tesla delivered 103,000 cars, and over the next few years, they scaled to hundreds of thousands, which is when they faced the vast majority of their financial problems. So there's no doubt that the next few years will be extremely difficult for NIO, given that they're just now entering production hell. And finally, moving on to the last major factor weighing down NIO, we have the Chinese government. Now, the Chinese government has no problems with NIO specifically. In fact, they're major proponents of the EV revolution. However, they've been fighting a corporate war against Jack Ma and a delisting war against the US for the past 18 months, and all this uncertainty has basically crashed the entire Chinese stock market. In fact, Alibaba nearly revisited IPO levels after dropping 76% from their all-time high. So, until NIO sheds all of its short-term investors, survives production hell, and the Chinese government lightens up, NIO's future remains uncertain. Despite all this uncertainty, personally, I don't think NIO is going anywhere for one reason, which is the Chinese government. While their actions thus far have been inadvertently hurting NIO, I'm rather confident that they won't let NIO go bankrupt. For the CCP, saving NIO is not only a matter of reducing pollution within China, but a matter of national pride. China really wants to beat the rest of the world to EVs and to be the first world power to make the transition. And sacrificing one of their biggest EV producers definitely won't help that. Also, we should note that the CCP has helped NIO in the past. In late 2019, when NIO was facing their recall crisis, the CCP gave them a $1 billion bailout. At the time, NIO's entire market cap was hovering at just $1 to $2 billion. So, the CCP basically gave them a loan that was the size of their market cap. Today, NIO is worth over $30 billion even with the recent decline. So, I think the CCP would be more willing than ever to loan them a couple billion if needed. Personally, I wouldn't invest in NIO because I'd rather just invest in Tesla. But with that being said, given CCP support, I don't think NIO is going anywhere anytime soon, despite their horrendous balance sheet. But that's just what I think. Do you guys think NIO will go bankrupt? Comment that down below. Also, drop a like if you hope NIO survives and accelerates EV adoption. And of course, consider checking out our international channels to watch our videos in other languages, and consider subscribing to see more questions logically answered. But until then, I'm Hari, and I'll see you guys on the next one.